everyone's going to get hurt. And I've talked for years, China does have a huge debt problem, but understand what China did building up that debt over the years. What did they do? They built railroads, they built airports, they built cities, they built infrastructure. While the West, we ate our seed corn. So if the system goes down, or when the system goes down, the West is going to be left basically sucking their thumb, and the East is going to be left with infrastructure. And I'm not so sure that it's even going to matter to the East. Yes, their banks are going to go down too, but they're going to be left with something real, and we're going to be left with nothing.
In today's news recap, silver soars as gold hits yet another record high. Precious metal prices stormed higher yesterday as investors flocked to safe places to store their money amid uncertainty over the U.S. election and tensions in the Middle East. Gold hit a record high of $2,740 an ounce, and silver topped $34 an ounce for the first time since 2012. Gold has risen more than 30% this year, while silver is up 43%. The rise in precious metal prices has been driven by expectations of further interest rate cuts by central banks around the world, as well as worries about the U.S. election result and conflict in the Middle East. The U.S. Federal Reserve and the Bank of England are widely expected to cut rates again early next month, while the European Central Bank did so last week. The People's Bank of China has also got in on the act, cutting rates yesterday in a bid to revive the world's second largest economy. Lower interest rates tend to boost the gold price because it becomes relatively more attractive to investors. Bullion is also seen as a safe asset in uncertain times. With 2 weeks to go until polling day, the U.S. election looks to be on a knife edge, while investors are also nervous about developments in the Middle East. The outlook for gold is quite bullish, said Joni Teves, a strategist at UBS, who is tipping it to hit $3,000 next year. He added, there are a lot of risks around the next few weeks with the U.S. election coming up. We could be in for some choppy price action. Now we'll show you the best clips of the latest interview, but first, smash the subscribe button and turn on notifications so you do not miss out our daily recaps. Enjoy the episode.
They want to take people's wealth. They want to crash the system and get the population to beg for help. And that help is going to be a central bank digital currency. It's the way to get the population to ask or even demand to give up their banking, personal finance privacy. That's what central bank digital currency does. If we get to that point, or when we get to that point, I don't think the central bank digital currencies are going to last very long. I mean, you may only see them last 6 months, and a true Mother Nature reset takeover where people will not accept anything that's not backed by something real. That's what the BRICS is all about, is they want to trade something real for something real. And you've got the WEF that wants to slide from the dollar to another fiat, non-bank, but digital currency. And the reason behind that is they want to be able to view every stick of gum that you purchase, and they'll be able to do that. First off, Russia absolutely understands that gold is the Achilles tendon to the dollar. I mean, you can go back to 2004 and you'll find a picture of Vladimir Putin holding up a 400-ounce bar with a big grin on his face. They've known all along that the Achilles tendon is gold. And what they're doing by making this announcement last Friday is they're putting further pressure on the gold shorts because they're expanding their purchases into, like you said, platinum, palladium, silver. And that is going to directly conflict with the shorts in those markets. And those markets are much smaller than gold. Silver's probably the smallest. Um, that if they go into the marketplace and say, buy me, pick a number, $50 million worth of silver. Silver's already in a huge deficit. And what they're doing by announcing, and then if they actually do start buying, is they're going to tip the scales, and that will lead directly to a failure to deliver. And that pulls the pants down on the West and shows that the whole thing is a fraud. With your question, they've for years have complained about the U.S. dollar system. I mean, they're going to be a number one, number two player in the BRICS, and obviously calling the shots. So I think that's going to be the role that they play. They do understand that they can't directly confront, and Russia understands this too, that they can't directly confront the U.S. From a financial standpoint, simply because those would be fighting words. And I don't think they want war. I think they just want free and fair trade settlement. They just want to do business. You have to understand the mindset of the Chinese, and I think Vladimir Putin has this same mindset that they know mathematically the U.S. is going to collapse under its own weight. So they don't want to be seen publicly as the cause for the collapse. So that's why they're slowly and methodically pushing the BRICS forward. Don't think they're going to push the U.S. over the edge. It's just going to happen on its own, simply because the math no longer works. When I say math, I'm talking about, the simplest one is the amount of interest that's paid on the debt. But just look at the whole system. The whole system is, it's certainly over leveraged. And I do believe that if we're not we're extremely close to debt saturation. And if the credit card numbers that were released earlier this week or late last week, if those numbers are correct, it shows you the consumers tapped out. The whole system is one big debt bomb.
Silver breaks 33, level with 5% surge. Gold hits new record high. BRICS hints gold-backed payment system. Economic uncertainties fuel precious metals rally. What's next for investors? In a dramatic turn of events for precious metals investors, silver has surged past the $33 per ounce mark, registering a remarkable 5% increase. This breakthrough comes as gold continues its record-breaking run, touching a new all-time high of $2,716 per ounce. The precious metals market is witnessing unprecedented momentum driven by a combination of geopolitical tensions, economic uncertainties, and shifting investor sentiments. Investors are closely watching potential technical formations in silver's price chart. Some analysts suggest these patterns could indicate further upside for silver prices. While predictions vary, historical precedent supports the possibility of significant price movements in silver. Between 2001 and 2011, silver prices surged from under $5 per ounce to $50 per ounce, representing a 10 times increase. Reports suggest the BRICS alliance, Brazil, Russia, India, China, and South Africa is developing a new payment system. Some sources claim this system may include gold as a payment option, potentially as part of a strategy to reduce reliance on the U.S. dollar in international trade. However, official confirmation of these details is still pending. The current surge in silver and gold prices reflects a combination of economic uncertainties, geopolitical tensions, and technical breakouts. However, Investors should approach these projections with caution. The precious metals market is known for its volatility, and past performance does not guarantee future results. Additionally, the potential role of gold in the BRICS payment system, while significant, is still developing, and its full impact remains to be seen. As global economic dynamics continue to shift, precious metals are likely to remain in focus for investors seeking to diversify their portfolios and hedge against economic uncertainties. Now, we'll show you the best clips of the latest interview, but first, hit the like button, smash the subscribe button, and turn on notifications so you do not miss out our daily videos. Enjoy the episode.
Last year, and that was when the U.S. basically weaponized the dollar, weaponized the SWIFT system, and said that they were going to basically commandeer 300 plus billion of Russian treasuries. And what that did was you had central banks all over the world, sovereign treasuries all over the world, looking at that and saying, well, wait, if they can do that to Russia, they can do it to us. What that's done is it kicked off huge buying worldwide from central banks trying to protect themselves, trying to fill their balance sheets up with something that will fill in the losses that are surely going to come from their dollar holdings. So just understand that's what's happened over the last, call it 1 year now. That's the reason for the rally. As far as what I'm looking at now, I really think we're going to see in a very short period of time, we're in the end game, which is a process. And last Friday, Russia announced that they're going to be buying other strategic commodities, and top of that list was silver. And I've been on the record for over 10 years now that when this thing finally breaks, it would be a failure to deliver in the silver market. It would immediately bleed into the gold market, and you'd see prices go dramatically higher, and that's going to be your loss of confidence. That will be your signal, and investors, central banks, etc., worldwide are going to see that type of move as a complete loss of confidence, and that will literally destroy the ability of the Treasury to continue borrowing. I definitely think there's something going on under the surface. And the reason I say this, why did we have a 50 basis point cut? The Fed has never, ever, ever cut 50 basis points outside of some form of crisis. So if everything's good, stock markets are at all-time highs, housing is very close to all-time highs. Commercial real estate is an exception. I mean, that's down what? 50, 60, even 80 plus % in some cases. But my point being, the Fed cut rates a half a point for some reason. And in my opinion, we'll find out, in my opinion, that some reason is something is on fire underneath the surface. And this was a way to put those flames out in the short term. So to answer your question, I mean, this is math at this point. The banking system, without a doubt, is going to come down. The entire system is going to come down. And you mentioned bail-ins. I'm glad you didn't say bailouts, because there won't ever be any bailouts again, I don't think. I fully believe that David Rogers Webb is 100% correct. Everything is footnoted. The laws are in place. We are going to go through the great taking. If you've got assets in the system, those assets are going to be stripped. So it's urgent at this point to get your assets out of the system with no counterparty risk. That way you get to keep your nest egg. To prepare for that would be, if you have debt and you can pay it off, pay your debt off. That's not it's still not going to completely protect your house because you're going to have to pay taxes on an annual basis, and only Lord knows where and how high those taxes are going to go. Will you be able to afford it, or are you going to have to walk away from your house? We're already seeing that uh, in like South Florida with the homeowners association fees. I mean, some of these people who bought condos 15, 20 years ago are getting bills in the mail of $250,000. And you're going to have people walking away, and those bills are only going to get bigger because your portion of what's left gets bigger. Uh, and as far as preparing, you need to prepare for, I'm going to say a minimum 6 months time where you may not have water, you may not have electricity, you certainly aren't going to have food. I mean, this thing goes down. There's not little elves in the back of your grocery store that bake loaves of bread. Everything gets shipped in. Nothing, when credit breaks, nothing's going to move. Uh, to get out of the system with your wealth, there's only really one way to do that, and that would be to purchase physical gold, physical silver, hold it yourself, or have it vaulted in a non-bank private vault. Do not put anything into a safe deposit box, because when your bank goes down, if you ever get to see that safe deposit box again, it'll be empty next time you see it.
What do you think of Bill Holter's take on the BRICS currency debasement and the end of the dollar? Bill warns that as the dollar weakens, we could see the rise of a new barter economy if the U.S. faces a major recession. He's also highlighted how BRICS nations like China and Russia are rapidly moving towards alternatives to the dollar, which could trigger the end of its global dominance. According to Bill, we're heading for a world where currency devaluation forces everyone to rethink the way they trade and invest. Let us know your thoughts in the comments. Thanks for watching, and don't miss this next video. It's just what you need. See you there.